Alright guys, I am back, and back. I don't know if I have any, I don't know if I want to play any music today. I think it's better to just dive into it, right? Now, I did a live stream yesterday. It was fun. Thank you so much for joining. Let me open this real quick just to see if anybody are in. So we're gonna do a whole bunch of things today. Of course, we're gonna go through the price action. Everybody tells you the price is down. They want you to feel down about GameStop. Saying it's not worth your time, it's not the investment, you should invest in Dollar General. We're gonna go through that one more time because I want to show you something. I want to show you that those things that were said, hold on one second, not in the, okay, sorry, I had to go back to watch myself live because I couldn't see the chat here. All right. Yes, that's... What? I don't even... Okay, hold on. I could play background music. Maybe that would hold on one second. Dun, 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 dun. Let's... Well, I'm gonna watch video later, but hold on one second. I'm gonna kind of turn down the music a little bit and see if it works. I don't know if that will... Lano, can you hear that music? Yeah? Okay. Thank you, thank you. Is it too high or? Okay, one second.
But if you don't wanna tell me now, I guess I'll get
All right. I guess you'll never know. If you don't invest in GameStop, I guess you'll never know. And just leave it at that. Okay. Goodbye. I'm done. No, that song is a good song. That's why I picked that one. There's a nice beat to it. It's bright, it's happy, and it's kind of lethargic in a way. But yeah, I mean, I guess you'll never know. Guess you never know if you're not gonna invest in GameStop right now. So of course, I'm biased. We all hold GameStop here. Looks like there are a couple of people. Welcome everybody. Thank you for joining. So I have Lionel here, obviously. But anyway, so that's good. I'm just gonna hurry into content, I guess. Lionel there is in a hurry. All right. I don't know. Are you still at work or? But anyway, so this is a chart for today. Obviously, we had an earning. The day before on the 6th. On Wednesday there, after hours, it went up immediately. Of course, they're trying to play it down, saying that it's not a good earnings and all that stuff. And every single article now, they have a narrative, a new narrative, right? They moved the goalposts again, you guys. Remember, that guy who was on Moran's show. If any of you haven't watched it already, you should go and watch that one. He just posted on his channel. It's amazing. It's like they say that Moran somehow is moving the goalpost, or everybody who invests in GameStop. Every single thing that GameStop is doing is a good thing, sugarcoating it and all that stuff, right? We don't have to do that. You know why? We don't even have, let's speak for, I'm going to try to speak for Ryan Cohen a little bit here. Because Ryan Cohen doesn't even need to sugarcoat to the point where he doesn't even have to do any earnings call. He didn't speak. So what else do you want? That's the definition of not sugarcoating shit. See what I mean? If you look at this, you don't need to sugarcoat it. Just look at the number and see what it comes to. Are you telling me that they're down by $100 million in revenue, but still come up ahead? Can you imagine if they were flat? Can you imagine if they're down by $50 million? They would have been profitable by $50 million. Or show a net income, I should say, because they are profitable. Dare I say so? I mean, man, but anyway, so instead of us moving the goalposts to keep, quote unquote, keep GameStop alive, right? I have to put it in quote because it's not my quote, obviously. But they are doing the moving of the goalposts as well, and they have been doing it. First, they will never become profitable. GameStop will never, ever post a profitable quarter, ever again, right? GameStop doesn't do this. GameStop should have Adam Aaron to run rather than Ryan Cohen. Familiar? Sound familiar? Yes, the same guy coming out of the woodwork again. Doing what? Well, before I go any further though, don't do any trade based on this analysis or anything. I'm not an expert whatsoever. I just like to watch the stock move, okay? And it just so happened to be GameStop right now. And of course, I'm biased. I'm an investor. So please be advised yourself. This is just my opinion, obviously. In the title right there, you see that I think this company is the best long-term investor of your lifetime right now. I can't promise that it's gonna, do a wonderful thing, but I think there is a huge possibility that they could become bigger. And I know that my thumbnail compared to Berkshire Hathaway, which is was it in the article that I have here? Man, I should have it up. I think I saw an article, you guys. GameStop. I think if I put Michael Pecker or Packer or whatever that guy's name is, it's probably would come up right there. So that guy come out of the woodwork again. What did he say? Right here. New idea. Has no new idea, right? So this is, again, this is like back in last earnings quarter, right? September 28th. He said that Ryan Cohen has no new idea. Okay? No new idea. Yeah, again, this is before the announcement of the investment policy change. And then analyst blast doomed GameStop after leadership announcement. And all of that BS, right? And then, again, moving the goalpost. No news idea. Well, guess what? The next one, what's the other one? The most recent one, what? Let's see, today, right here. So he claimed that I hate it when they do this. No, I don't want it. Bye. Goodbye. I'm sorry, you guys. Sorry. Warn people. No, that's September 7th. That's not even today. I don't know why it's not the first thing that comes up. I apologize, you guys. This show is terrifyingly unprepared. Still doom. Brian Cohen wasn't fun. Insane. Inane, not insane, inane. Now I have not seen this one yet. Did they talk about GameStop? We'll watch it together because I have not watched that one. GameStop inane, meaning insane. I think I look up that words. It just means silly, stupid, right? Pivot led Ryan Cohen invest funds in stock. Now, of course, they only, kind of painted it stock, right? It could be anything. It could be any investment fund or any investment that Ryan Cohen see fit to use GameStop money to buy other company. And company that we don't, like you and I, regular retail investor do not have access to. So think about private equity or privately owned company that we can't invest into it unless you are accredited investor, right? For example, Ripple, the company, the crypto company that is, doing remittance, transferring money back and forth. I'm not saying they're going to buy Ripple. I'm saying that, of course I would talk up Ripple, right? Because I own XRP. So, I mean, it's only natural that you promote your own stuff. But I truly believe in the stuff that I invest in, and this is why I have such a high conviction in GameStop, because it does have a good investment. That's why I'm in it. That's why I make the choice to buy into GameStop at $40, and I'm so happy that it's down here now that I could add more. And even with good news like this, they're still bashing GameStop, saying it is a silly or stupid decision to go to. When months ago, they were telling, the same guy, right? Michael Packer is saying that Ryan Cohen has no new ideas. Well, here we go. New ideas. What else now? I mean, What else are you gonna say about GameStop? Well, this is the L's that they are. This is the thing that they are saying now. That is a stupid decision. Okay, so when we're gonna get a whole bunch of company that is more profitable, let's say we added, $200 million into our company, our holding or whatever. What then? It's like, oh, it's only $200 million. That's it. That's the company that you're investing in. I bet you anything that's what they're gonna say when there's announcement that we're gonna get into anything. So anything that we're getting into, they're gonna bash it no matter what. So that's what I'm saying. Like this guy who come to Moran's show, okay, telling Morantz that Morantz is moving goalposts, sugarcoating everything. These people are doing the opposite. And so, it's a matter of whether you are right or wrong. I think we are right in investing in GameStop. I'm going to speak for myself. I can't speak for all of you. All three of you right here. Again, thank you for joining. Lionel, show them what I send you today. Hold on one second. Which one? Oh, the news, you mean? Hold on one second. I think I have it, but yeah, I think it was the news, I know. But I think what you mean is this one right here. Don't fall for GameStop good news. Is that what you mean by that one? The one that you said? Yeah, I mean, it's like goalpost after goalpost. Oh, don't fall for it. It's not really a good news, quote unquote, right? Of course, they're trying to mislead you into doing stupid shit. And of course, they're going to compare it to AMC. Like, what else is new here? Who has no new idea? It's them. And they always, it's them. So, it's a classic trick in the book, right? When you are, run out of stuff to say that is valid, this new media is going to point a finger, telling the world exactly who they are by calling other people that. Exactly. So, they have no integrity, Again, these people are corrupt and they don't care about the truth. They're just here to bash no matter what, to say, a lot of things about Ryan Cohen, about the people that invest with him. And this is, again, to me, this is a similarity that I see between Elon Musk before he was famous, okay, that he had Tesla. He was there to build this company, okay, the company that people now is, the biggest company in the whole world, one of the biggest company in the whole world, because people believe in Elon Musk at that time. Remember, Tesla was $10 when these people are telling you to never hold Tesla for a long term. Well, we know how that goes for people who are actually holding Tesla, buying Tesla at $10 a share and hold it for decades on end. So you have to be willing to buy anything and hold it for 10 years. Otherwise, you have no business in owning the share. And I truly believe that. And that's why I usually bring up Warren Buffett, bring up, a lot of people that are Ray Dalio, the same principle, right? But of course, like those successful investor, they're there for a reason. And they're just, I guess they're fortunate enough we're fortunate enough to hear them talk about the economy and all that stuff. Of course, I admire Warren Buffett for what he's done for the company, for Berkshire Hathaway anyway, or many of his investors make them billionaires. Whoever put money with him, trust him to the T. And now we got, well, my generation, I trust Ryan Cohen, I trust him because he has demonstrated to me that he could invest the company's money. And now it's his money too. It's not just Gamestop money, it's his money because it's 13% of it. See what I mean? He's the largest shareholder. And the reason why I trust him, it's because of this. Look at this number. Like, you think this number won't get pumped up when these people, get bought up by, other billionaires that really want to invest in GameStop? They're going to flip the script so quickly that makes your head spin type thing. Because these people who write these articles do not have integrity. They don't. And so that's why they keep saying stuff like this. And it's a dying breath in my mind, in my opinion. They are dying, grasping for air right now. It's like, oh my God, don't buy. Don't buy GameStop. Please. That's my impression of him. Okay, enough of my ranting. I have not even doing any technical analysis here. Although I'm just pretending to know what I'm talking about here. I have no idea what I'm talking about. So, what I was kind of playing around earlier, right here, okay? Earlier, right here. Hold on, one second. Boom. So this is a daily volume. If you were to look at the volume today, it's 10.4 million shares being traded back and forth today. 10.4, right? But look at the buying volume right there. That's close to $20 million. 20 million shares being traded back and forth. So 20 million would do this versus 10 million mostly sell volume down. So even then, they can't push it far enough. I'm not saying that they won't be able to. They could do a lot of things. Remember, it's been 3 years already of in the making here. So I don't know. Maybe they're ready to close, to do whatever it takes to survive. Remember, these people have connection, have the technology to do whatever they need to do to get out of this, including buying politicians out there. And they have been. But it really doesn't matter because, again, eventually these people gonna, flip long. They have no choice because Ryan Cohen has demonstrated to them that he is valuable. He is not only valuable, but also capable of doing amazing things for America. No, I'm kidding. I don't know. For GameStop, and I think, he's going to invest in a company and build it up instead of investing it and tear it down. I know it's going to take some time. It's going to take some time, okay, to build those up, to make it strong, just like GameStop. Remember, 3 years. That's it. People, this Ryan Cohen has been enduring a lot of negative press, and he doesn't deserve that at all. I know. I speak highly of Ryan Cohen. I think he deserves it. He deserves all of the accolades that people have given him. And, I think this is going to be historical in 30 years. In 30 years, we'll be like sitting in GameStop annual meeting. And then, it's like, okay, what's your next investment? How do you know about GameStop back then? And what advice do you have? Just like Warren Buffett and Charlie Munger. I know Charlie Munger passed, but, stuff like that. So I think the future is bright. Right now, because it's $15.50 a share, people don't see it yet. They don't want to buy it at this price. You know why? Because they're like, oh, it used to be $100. So you're telling me you don't want to buy at $100. You want to buy up here, right? When it's popular. Oh, people buying it left and right up here, Ooh, oh my goodness, it's gonna go higher, right? It's gonna go higher. But now when it's down here, you don't want to buy into it? Are you kidding me? This is why I always said price is psychological. Don't let it get down to you. In fact, this is a steep discount that you better, snatch it. If not, okay, sell it to us, or add more your short position if you would like. You could bring it down. You could bring it down way down here to where Ryan Cohen used to buy into. It's possible. Can you? Whoever is in control of this market, they always say, well, it's a supply and demand, right? Well, they could do a lot of things to the demand side, by rerouting it somewhere else. When it's supposed to be on the lit market, it's not on the lit market. How about that? There's evidence that it's not on the lit market. So, sorry, you guys, 1 second. It's going to kill the short. Yeah, bullish. I agree with you. The short thing, the short thesis is, I think it's overblown. I get it. It's one of those things where they jump on it and they make a mistake. But the thing is, they double down on it. They've been doubling down, tripling down, quadrupling down on it. And still, because again, they're still skeptical of what Ryan Cohen could achieve. And so, earnings after earnings after earnings, they've been beating by 100%. Look, 100% here. Close to 100% there, 80% there, 6%. Okay, not too bad. And then 200%. So this is the fourth quarter earnings report right here. Fourth quarter for last year, and we beat expectation. And keep in mind too, this I bet you anything, this expectation is very high expectation too. Okay, it's a high expectation. That's why they make that expectation, because they thought that Ryan Cohen cannot achieve it. So they're wrong, right? How they could be so wrong? No idea. But to do this 4 consecutive quarter and still, but look at this too. Look, back in, hold on, is this? I think this is quarter 1. Yeah, end period. Quarter 1 right here. Down 100 million again, right there. But look, beat earning by 6%. The same way here, down 100 million, beat earning by 100%. So I would imagine next quarter and the next quarter, it's going to be better and better. What is the expectation for next quarter? Okay, there you go. So even the expectation has increased, right? Isn't this a mic drop or what? So now they're expecting, wait for it, that the earnings is going to be 27 cents per share. So that's in the positive. So we are setting ourselves up to be positive right now. $2.06 billion estimate for the next quarter. This is the fourth quarter, end of the year, and we're gonna get all kinds of stuff happened. So again, I don't expect a miracle here. I'm expecting incremental. Even if we earn just 1 cent a share, next quarter, I would still be fine. I would much rather Brian Cohen use every single penny of net profit to do amazing things with other company. Invest as much as you can. You see what I mean? So, and they have the ability to do that. So that's that, And I don't know. I have some speculation for myself too, that what if GameStop. Hold on, let me read. They can't bring it down to, you said $6? That's 6. I don't know how to take away this little thing. Okay, Migo. Brian Cohen can buy the share for $300 million. I agree, but I think like if the panic ensue, that's always been my perspective, is that, you know, when the S&P 500 is dropping, which, you know, there's a lot of data that suggests that it could drop to the tune of of at least like 30% of the S&P 500, right? So when that drop happens, when everything, even Apple and all those big companies, gonna drop like a rock, right? GameStop's gonna come down with it as well because of the panic, right? And again, the panic comes in from the ETFs out there, the investment funds that have tons of GameStop ETF, and they just sell it in mass. So those type of trigger happens as well. So just, again, that's why I'm mentally preparing myself for it. And I hope some of you kind of mentally prepare for that as well. Just so that you know that it's not the company, it's not that does that when the price coming down to wherever, right? $9 or $6 right here. You know, I agree with you. They can't bring it down. However, there are market circumstances that may happen that way. Again, it's just psychological preparedness because price is psychological. So it's part of the training that I've trained myself to do pretty well as a, you know, used to be Bitcoin investor, and, you know, just the fluctuation of up and down, and the fact that I knew, you know, just from learning trading and all that stuff, losing money, buying at the top, selling at the bottom type thing, right? And then the next cycle, I learned to, like, every time I see a 5%, 10%, 15%, or 30% drop in a day, I add more, and I add more. So, and that's why I built a whole bunch of position in Bitcoin, and was able to make, you know, more than I could imagine that I made that year. Now, to most of you, you probably have more, like that amount of money is not much to you, but, you know, at the time it was a lot for me. And so I learned from that, and, you know, I take that lesson, and now I add another lesson, which is to analyze company based on the balance sheet. And another mistake that I made was with AMC. Now, thank goodness I did make some money on it, because I did sell, you know, just enough, you know, at the time, around 40, 50. Again, like I wean it off, like slowly exit out the position, because I know that, you know, at some point it's going to drop, just like, you know, BTC over here. And, you know, it's not, you're never going to go broke taking profit type thing, right? But, and then I jump back in at 30, or even, you know, and then lost some. But I didn't jump in all in back. It's just like a couple thousand here and there. But nonetheless, you know, you learn throughout that. And at that time, I did not look into AMC balance sheets. So this is why, you know, I discovered Marantz, and Marantz has been, you know, inspiration to me, because he kept his message pretty clear there. You know, hey, look at the balance sheet. And this is why I started to learn to do it myself, because no analyst out there will give you an honest analysis for GameStop at all. And they will lie until they die, I think, so to speak, figuratively, okay? Figuratively. All right, so as you see there, Bitcoin's going up. I think I have hold on. I think I have a chart. I might have BTC. Sorry, you guys. I should have this prepared ahead of time. There you go. So I had a chart draw up a while back. Okay, what did I see this? Sorry, why did I do that? Oh, I think I was predicting GameStop earnings report and all that stuff. Excuse me one second. Okay, sorry. But so I did that horizontal line on the day of earnings for GameStop. What my original thought was that they're gonna pull, rocket the price of Bitcoin up, and then when the earning is good, they're gonna drop it to pay for GameStop squeeze, right? But it didn't happen yet, so I think they're gonna try to pump Bitcoin up here. I think institution is doing this pumping right here because I see news coming now talking about Bitcoin right now, and when the news is talking about it, that's usually the times that that you should sell, right? They didn't talk about it when it was at this low right here, at this price, 20, what is it? Around $16,000 per coin right here. They didn't talk about that over here, when you should be buying. They were silent, or even trying to bet that, it's gonna even coming lower. It's gonna get the opposite. And that's why there's so many positive news about Bitcoin. It's coming back and whatnot. So take it with a grain of salt, right? So when is it going to come crashing down? I don't know. It could be as early as next week. They might be pumping it until then and try to fake out a lot of people. Oh, it's going back to $50,000. It's going to be $100,000 from here. No. Not yet. The reason being is that it has a cycle here, and we are in the middle right here. And I've shown you guys before, this middle part is essential in distribution, right? And so they're going to try to pump it up until then, and then boom, back down. And it's mathematical. I'm not saying it's going to hit there just like that, but what it is, it's just math here, right? Because if you measure it right here from top to top, again right there, remember 30%. If you do the same here, 30%, right? Now the low, because this is Corona time, it's kind of like a black swan, so I'm not gonna measure it down to there. But if you look at to the lowest of this right here, you see around 66%. So my thought is that they're going to pump it to that level of 30% down from the high, right? And then they're going to pump it down to around 66 right here. So that's why I had it originally there, around $25,000 or so. Now that's assuming that there's no market crash events and people panic crazy again, just like the Corona, right? So again, any black swan event or crash happens, World War III announcement, anything gonna cause this market to go down. But for now though, they're seemingly pumping it up throughout the weekend. If it still stay the same, just preface this ahead of time though. I think I mentioned it before in my live stream that the reason that I'm happy really doesn't matter what. I have not directly, but Bitcoin, because of the Celsius platform. I'm kind of like trying to wait for that as well. So since they bought Bitcoin or half Bitcoin and ETH in its holding as the asset, the more Bitcoin goes up, the better chance of me getting 100% of my money back. So that's pretty good. So yeah, if it keeps goes up, I'm okay. But if it keeps going down, $25,000 a coin, I'm gonna get less back. So it's really waiting for the judge decision to go ahead, or the SEC decision to sign off on the plan, on the Bitcoin mining that they have. So again, I mean, that platform actually did have good asset. It's just that it was operating at a loss at the time, or insolvent, because people were like doing a bank run on them. So I don't know how fair it is. I know Mashinsky kind of misleading people into saying that it's the safest thing and have nothing to worry about, but behind closed door, he was panicking, and we all know that throughout the lawsuit. So. But that's not important at all into this discussion. I don't know why I bring that up, but there you go. Migo, the best decision I ever made was to move my money from AMC to GME. I would be down 95% if I stay at AMC. AMC is that play. Yeah, I mean, I'm the same way, the same thing. When they announced Abe's, that's when I was like, oh my God, I have to like seek a different opinion here, because this is crazy, because I'm doing the math in my head and it does not add up at all. They're telling me it's a dividend, but it's not a dividend, type thing. And so, like, let me look into this a little bit more. But yeah, I agree with you, Migo. Very, very, very good. All right, let's get back to GameStop. Why I think it's the best investment of a lifetime here. This is, another figure, Peter Lynch, and he's the successful guy. Invests for Fidelity for a long time, and he has his own philosophy, right? No significant insider selling over the past year. On the controversial insider are buying, or on the contrary, goodness, I can't even read. On the contrary, insiders are buying. So what is it? GameStop, right? If you look at this one right here, GameStop is forecast to become profitable over the next couple of years. GameStop does not have any negative shareholder equity. That's good. What else? GameStop has no more significant financial data available, yet Wall Street analysts still ignore it and misinterpret it. No, I think they're misleading. It's not about misinterpretation here. There's no way that you could misinterpret a plus and minuses. No. You could mislead people, that's for sure. Earnings are forecast to grow, while SDG&A is expected to shrink in the coming year. True. No concerning events apart from their usual Wall Street shield through their legacy media. That's true. Outlet. GameStop has significant cash for at least 20 years of operation based on the current result. True. Shareholder equity have not been diluted in the past years. True. Been 3 years already. We have not been diluted. They have not raised more money using the shares on hand. So there's tons and tons of possibility here. But let's listen to Peter Lynch right here.
Pros and cons of concentrating your investments versus diversification. Okay, very good question. I don't believe in diversification at all. I would own one stock if I could find one great stock. Diversification is a big mistake. Pros and cons of concentrating your investments versus diversification.
I thought it was longer for some reason. Yeah, so diversification is, again, it's for people who already have the the wealth, that they don't need to grow it, in that vehicle. Why would they want to risk growing with GameStop when they could just be safe and not care? And that's why S&P 500 is there. It's for them. It's for people who already have the wealth, that they don't care how much they lose. They just care to maintain it, because over the year, it stay up and up and up. But it's not growing fast enough for you and I to gain money quickly, to be well off, so to speak. Man, I'm falling asleep already. How is everybody? Yes, thank you. I appreciate you. 2 viewers, as I said. I was like, that was fun. Kind of poke fun at Moran's too. Okay, so that's just GameStop right there. So yeah, of course, like again, moving the goalposts, saying that this decision to make the stock picker, the decision for Ryan to use that fund to do whatever they need to, is a new idea that GameStop is going to be more profitable. Now, my other speculation, but I never got to, is perhaps what if they're looking at Steam right now? You see, the reason why I think Steam is a good candidate, not AMC. Of course, I saw that article too. That was stupid. What the hell? How about Steam? Look at this digital store. Okay, digital store, and every single game on here. Well, not everyone, but on PC, you see, what do you see there? Steam, right? On Steam, right there. So, perhaps they're looking into it. Now, Steam is a digital download gaming, website that you could go and buy game from that website and download it digitally. So, that narrative out of the window. Stay with you until the end. Sorry. I know, I think maybe another half an hour or so. So, because I need to go through all this. Sorry, I was like babbling. But anyway, so I was like, well, what if they're looking into Steam online platform, ultimate online platform? And I don't know if they have a owner or whatever, or they could infuse some cash in here and say, hey, let's partner up, let's incorporate anything that we need to. I'm gonna own a portion of your company. Let's make a partnership here, right? And so there you go, and you have a partnership, and now you strengthen that platform more. And then of course, in turn, you have GameStop as the brand to back that up too. So it's not within the realm of possibility. And another thing that they could do is buying gaming company, meaning game maker studio, right? Like those small studio that nobody knows, and so then they could create their own game. It's like, oh my God, the possibility is endless, to the point where it makes your head spin sometimes, right? And this type of investment is not it's not out of the realm at all. Another thing, live stream. See, a live stream like Twitch, for example, or Player, right? Like we have been talking about. I think Moran also talks about it as well. I think I got it from him, actually. Let's give credit where credit's due. So I saw this video right here, and it's kind of spot on. I don't know if right here. Boom.
GameStop's going to be worth.
Let's listen. Let's listen in, and then I'll come back.
Guess what happens here? GameStop's going to be worth billions of dollars outside of just what you see. You guys see brick and mortar. You guys see sales of video games. You're not understanding what I'm telling you. Ryan Cohen is a billionaire investor. They're going to invest billions of dollars into other things. It's the next everything. I've been saying this for 2.5 years. We're going on 3 years now. GameStop is going to take over. This is how you launch Player. This is how you launch Teddy. And if any of you guys know what I'm talking about, if you don't, it's okay. Maybe you were meant to see this video. Maybe you made it this far for a reason. GameStop's it. I'm trying to help you. I'm telling you what it is. It's everything. GameStop. Can't stop, won't stop. GameStop. I'll see you around, millionaires. Literally. Peace.
Well, it depends on how many shares you have up until then. Okay. I have not watched this one.
No financial advice. I've been talking about GameStop for the last 3 years, and the earnings came out today, but big news came out on GameStop. And someone asked me to break down the balance sheet and show them everything that happened with GameStop for the quarter. So I'm going to do that right now. Pay attention. So GameStop had over $100 million increase on cash and cash equivalents. Their marketable securities are up almost $62 million, and they're making money. So their assets are here. And they're going to have total assets of 3.14. To give you an idea, their liabilities are 1.8. Okay, 1.8. So assets are more than liabilities, which equal shareholder equity of $1.2 billion. Shareholder equity increased from last year versus this year. Now, a good indicator is this right here. This is last year, January. That's after Christmas, Black Friday, you name it, Q4. So they had an increase from 1.245 all the way up here, about $60 million increase. So you can see another 60 coming here on the books if you think about it. 60 is coming. So we'll get back up to the 1.32. That's what I predict at least. Another part here is net sales. So this is net sales last year versus this year. Everyone's going to tell you they fell off on net sales. But what people aren't paying attention to is it only cost you about $10 million to lose $100 million. So net gross is actually down $10 million off of 100 million less sales. So what that tells you is that from last year, okay, to this year now is where we're at after 9 months, you're going to see that GameStop is up about $3 million over last year, but yet it's 3.7 versus 3.4. So with less sales, better profits. That's what you see. They're running the business a little bit better. How much better? From $361 million loss to 56, I apologize. That's a $300 million swing from year versus year. So to give you an example, the quarterly number, GameStop lost $94 million last year, the same quarter, versus last year, they've only lost $3 million this year. So a complete swing of $91 million. That is a great job. Huge thumbs up on them. Next part I'm going to show you is
I think it's this one.
And welcome back to Marant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. I've been talking about GameStop for the
Hold on, this is... Wait, is this part 2?
Hi guys, and welcome back to Marant's Rants. Plenty of good
That's so weird.
January, that's after Christmas, Black Friday, you name it, Q4. So they had an increase from 1.245 all the way up here, about $60 million increase.
Oh, I think we watched that already. But anyway, you could go to his page and watch all that too. Okay. So originally I was going to react to a couple of videos, but let's get through this one. I have not seen this one. So I forgot. Let's kind of speed it up a little bit here.
GameStop had a mixed quarter with better than expected margins and cash flows, but shares fell 5% anyway. Any good detail here is offset by signs of struggle, and we're here to talk about it. Let's get started. All right, guys, let's get right into it. GameStop. What was their earnings report like? Tell me about the good, the bad, the ugly.
Okay, well, I'll start here. Thanks for having us, Lacey. So the good news for GameStop, I guess you'd have to say would be earnings. They keep showing improvement on earnings. Thomas and I were chatting a little bit this morning.
This is an actual news channel that I've seen so far to talk kind of truthfully. I like this so far.
I guess it depends on how you want to read the earnings report. They either broke even or they were down a penny. Either way, they're up year over year, which is progress. The bad news would be revenue. They had a miss on revenue. The miss would have been worse if they didn't have increased sales in the UK, because Australia, United States, Canada, all of those were down significantly. And then the ugly would be that analysts are saying, despite the fact that they've done the cost-cutting measures that they've done, they probably still have twice as many stores open as they need to have.
Mm-hmm.
which they could continue to cut. Okay, but they don't want to cut too fast to the point where they don't have any revenue at all.
Yeah, right. I think Chris hit the nail on the head here. The report had a few Easter eggs in it, but ultimately the story is still the same. Try as they might, GameStop can't grow, and it's slowly eating itself to death.
I think I speak too soon, you guys. I think I speak too soon. I'm sorry.
There's a lot of dead weight, and it's got little hope for a meaningful recovery anytime soon. Sales are down in all segments. Consumer is weak. The holiday quarter is going to be pretty horrible. I don't see a lot of news to rally on in the report.
Well, consumer is weak. It's not because of Brian Cohen because of GameStop unable to selling stuff. It's because of the economy, stupid. Okay? The economy is not doing well. Everybody is struggling right now. Just wait. But again, GameStop is doing great.
All right, so just based on what you guys said there, and also based on our past conversations about this, I know that neither of you are big fans of GameStop. So what is it specifically? Why is it anything about the company or the stock that that you guys have those feelings towards this?
For me, really, it comes down to the company. I just don't see where the growth is coming from. There's nothing that I see from the company that I would say, oh, I have to go to a GameStop store for, or I have to get that online, or that gamers would need to do that with. I don't see anything like that. I mean, I guess you could say the vintage, the collectible side of the business, but that's a very small niche market, and it doesn't really seem to be contributing much to revenue. And you would think that if they hadn't something like that, that the company would at least do an earnings call, which they haven't done in several quarters. So they're not doing, if they do have something that's really a unique proposition for their company, they're doing the best job in the world of keeping it secret.
Right. To me, it's just
they're doing the best job in the world in showing people on the balance sheet that they're doing better. Okay, at the very least, better. Okay, maybe not amazing, like enthusiastically, because you haven't been following GameStop as much as you think you have. And if you haven't seen any idea, how about the idea of buying little tiny companies and run it and invest in them and get to keep some of their profits?
the business model is kind of non-productive.
Yeah.
Ultimately, what we have here is a publicly...
And that's another thing too. It's the fact that, it's just a collectible. It's like they always give the same narrative. And of course, they rub shoulder together, these people. And they talk about GameStop the same way. So I don't blame them because they're echoing their own chamber here. They're not just collectible. Of course, they have other stuff. Okay. It's like other stuff. I mean, PC, I've shown you guys this before. Desktops and all that stuff. These are high ticket items. So, they do have that. And as far as you don't see why people would want to choose to buy GameStop, well, they have some perks. They have some reward programs and all that stuff. Pro membership. If you don't know what that is, it's just you pay $25 a year and you're gonna get every discount in the world, right? 5% of this, and then when you trade in your goods, your PlayStation, your old one, you get 5% more than regular people. So, and then also too, like 2% reward program, right? 2% cash back. That's another value added too. So that's why people would choose to buy GameStop. And also, anytime you buy stuff from GameStop, what do you get? You get value added, meaning that you could trust them to give you that discount when they tell you, hey, 50% off. That's the actual discount right there. Not overinflated price, nothing like that. It's actual discount, as we've shown before.
Traded flea market for old stuff. It's just not a viable market for growth. You're relying on people that want to buy these old things. It's already a small market. I think that a lot of pent up demand right now, when it becomes unleashed, will probably be more interested in new products than old products.
Yeah.
How about, you know what I just thought of too? How about Newegg? Like they could buy up Newegg. Well, I don't know what a Newegg balance sheet is, but again, they could gobble up that side of the market as well, and PC builder, game builder that would allow you to customize your own PC. How about that one? They could technically do anything with that $1 billion. So the fact that you don't see it, you don't have any vision whatsoever.
Right. So the whole shift with the core business, they shifted into the collectibles and NFTs and those kinds of avenues looking for growth, and they're not growing at all. They're costing the company money.
No, it doesn't cost the company money. Nope. They decreased cost by $100 million this quarter. Well, $91 million, but still, yeah, close to $100 million per quarter. So they're not spending more money.
Cohen's doing a great job controlling costs, but there's no growth. As long as revenue is pressured and declining, the deleveraging is going to offset whatever kind of cost controls they can have. They did increase their cash this past quarter, but at the cost of inventory. The inventory decline did not equal or was actually more than the amount of cash that they increased. So that's kind of a sign of just that comment before, slowly eating itself to death. They can persist indefinitely, really, the way that it looks, but I think it's just going to be a slow burn until the company goes out of business.
In 20 years? Really? A slow burn of 20 years of cash on hand right now.
All right. Well, I saw that GameStop's board of directors approved a policy, and that policy permits the company to invest in equity securities, among other investments. Is this bullish?
Ooh, I'm waiting for this. Let's listen in.
For the stock?
I don't think it is really, unless GameStop is planning to become an equity holding company, which I don't believe is going to happen. I think what this really is a move that helps free up Mr. Cohen so that he can start investing in things that he wants to do outside of this company. The catch is that GameStop, I think, is going to have to do the same investments as he does on his own. So that's my take on it. I don't see it really as a mover so much as a nod by the board to Mr. Cohen to help free up his personal life.
Yeah,
Interesting take.
I saw something where analysts from Wedbush are saying that they're calling the move alarming because it implies that GameStop has to believe that they can achieve better returns on equity from other company stock than their own. That's just
right.
That's
right.
Really.
So you're quoting Wedbush. Okay, all right, and it makes sense. That's why you have to read it, right? Mm-hmm.
That's what I thought of when I saw it yesterday. I was like, that's what you're saying.
Well, totally. It's like it's a GameStop. They sell games and consoles and stuff.
Yeah.
But now they're going to try to invest in equities. They tried to capitalize on cryptocurrency, and that failed utterly.
Right. Yeah.
So are they going to start investing in equities? Because then you should just start investing in like venture capital firms or mutual funds or something. I guess I don't know.
Yeah.
All right. Well,
I don't know. Oh my God! Don't do that because you're gonna make more money. No, of course, these people obviously, they have their own narrative. I have my own narrative too. But I think they're wrong, and they want to pursue or persuade more people to think their way. So that's just what it is.
we know that we're going to be hearing from GameStop investors. They're going to say that the fundamentals, it doesn't matter. They're going to keep holding the stock no matter what. But maybe we'll even get some of those comments down below. But is this a viable strategy?
Yeah, I think it's a fool's play. If you say that fundamentals don't matter and the cash position is why you're buying the stock, what you're ultimately hoping for is that the stock is going to get liquidated and you'll get some gains off of that. I mean, that's not a good strategy. Right now, the stock is in a definite downtrend. There is some dip buying going on right now, but that downtrend is still in heavy effect. I would expect any upswing in the price action to draw more bears into the picture and just increase the already heavy short interest.
Okay, go ahead, short it some more. What do you think GameStop's gonna do? Like, these people don't even really. So if you think that the price is gonna keep cascading down and down and down, and the company is doing much better and better year over year, what do you think is gonna happen? Fundamentally, it is sound. So do you think that GameStop is going to need some cash from shareholder equity here? No. They're not going to need some cash. In fact, they're going to bring in more investor billionaires, millionaires that he knows. It's like, hey, put $100,000 in here. You know? Oh, okay, $100,000, no problem. I trust you. So you have a network of people that's going to trust him. And, you have Larry Chain too. A network that he knows of. Friends and family that he knows of. People that trust him as a person. So the network effect of investors coming in is a long way. But they would go to those people before they go to retail. Think about that. Or, to the share price of GameStop.
This is the hardest part about analyzing GameStop, because it's kind of like you've got these two things going on. It's like a Marvel movie. You've got on the one hand this mild-mannered company. I used a reference to The Office this morning that I said Dunder Mifflin, but I'll say it's the Blockbuster Video of video game companies. It's just it's a dying business model.
Again, Blockbuster all the time, right? The same freaking narrative. Okay, what? Huh? Is there any new idea you guys have? Like, come on.
And then on the other hand, you've got GameStop, which is this meme stock that's going to slay all these hedge funds. It's an odd hill for traders to be looking to die on, but at the same time, as Thomas said, they've got cash. And as long as they have cash, this can go on, this little cat and mouse game that's going on can go on indefinitely as these traders are hoping for the next short squeeze, which is really the only play that I see that they have.
Yeah, I think Blockbuster is a good analogy. I mean, if you look at the rise of tech today, we're in the AI evolution, the cloud evolution.
Right.
So more and more gaming is going to become PC based over the cloud. You're going to need less consoles. There'll be less cartridges. There'll be less need for the used console cartridge market. I mean, I think that it's just a matter of time before GameStop has nothing to sell.
Yeah, but then that's why they're doing other thing other than that. So when this thing is dying down, quote unquote, they're going to have other stuff to fall back on, which is owning other companies.
All right. Well, Thomas, they're sitting on cash. So does that cash matter, or are they kind of burning through that position?
So I think that me and Chris have kind of commented on this a few times so far, but in my opinion, the cash is why this horse won't die. We can beat it to death, but it's not going to die until the cash position makes the bulls think that there's no more hope. Right now, they're hoping that there's enough cash to sustain business through a turnaround to the next rebound, but it's really just going to, sustain the business as it is, because there's really not going to be a rebound in the future that we can see. It's just, there's not a visible catalyst for growth here.
All right.
Okay. What? If they're becoming profitable, when you buy shares, you do not have to pay interest. So technically, you can last forever. Okay. It seems like I'm kind of like disconnecting over here. But anyway, so of course.
As we discussed today, GameStop's intricate tale of positive strides against ongoing struggles will remain a focal point. We'll be covering that right here at Market Beat. So stay tuned. We'll see you next time.
Of course, right? Yeah. These people has no integrity. All right, so you guys, let me end on this one. Of course, I was gonna do this a lot earlier, but we've seen this guy already last live stream. If you haven't checked it out already, go and check it out again. But you don't miss anything. Honestly, it's just the same narrative, the same thing. What it is that they're trying to say that Chewy is coming down. Chewy is related to Ryan Cohen. Therefore, it's not surprising that after earnings, GameStop went down, so on and so forth. But hold on, let me. And so this guy immediately, kind of bashed GameStop right away, saying it's not a buy. Saying the same thing, collectible, this little Funko Pop thing, the focal point of the business. That is just not true. They're doing bigger and better things. But anyway, in that segment, he mentioned to buy, instead of buying GameStop, you should buy Dollar General. So this genius right here is telling you, okay, this genius right here, telling you to buy Dollar General. Now, from Moran's, video, I didn't go and look in one. I apologize for that. Don't have time for that. But I have a couple minutes to kind of show you what the balance sheet is like. So this is the private equity, right? Finance guy making fun of him. It's just a playbook, right? That they are telling you to do these things. Why? Look at the insider ownership. Less than 1%. So of course this guy's going to want you to buy. Look at the institutional ownership, 92%. So you're telling me that because the institutional are owning it, you want retail to buy it now. So that's why you're ready to pump it. It's so clear as day. Now look at the PE ratio for this one, 14. That's 4% more, or 40% more, I should say. More than, that's 14 times its earning. That's retail. Retail shouldn't trade at this high right here. Price to sell. So price to sell. Market cap is lower than revenue. Okay. Price to book, not too bad, but GameStop is less than 4. Okay. PEG ratio, bad, because you're supposed to be less than 3. It's better. Price to cash flow, 60 times. And you're telling me you want me to buy to this thing? Okay. Net income, not too bad, but I'll show you what makes me nervous about this. Right here. That's a risk of bankruptcy. Here, let me verify it real quick. I think we've heard of this score before. Hold on, let me put this up here. So how to interpret the score? Shishi score, what is it? What's understanding the score? So B, hold on 1 second. I want to see a short version of it. Good. What does it mean? What is good? So a score of below 1.8 signal that the company is likely headed for bankruptcy. Below 1.8, okay? While company with a score above 3, okay, is not likely to go bankrupt. So above 3 is good. Lower than 3 is bad, or at least at the risk of bankruptcy. So the score is lower than 3 for Dollar General. GameStop is higher than 3. So again, this is why they pump it to you. Okay, look at the net cash position, $17 billion. What? Look at the total debt, $18 billion. You want me to buy into this? You want me to buy into this debt when GameStop don't have hardly any? Are you kidding me? Genius. What a genius. Look, CapEx. CapEx. Do you realize how much GameStop spent last quarter? Capital expenditure. $8 million. That's it for last quarter. Now, the profit margin is better than GameStop. Kudos to them. But again, you have billions of dollars in debt. So, and of course, these geniuses want you to buy into it. What? Twice as much? Oh, they're projecting even better than average. Right now, it's below average. You should buy into it. Baloney. And this is why I tell you that these analysts do not have integrity. They don't have any integrity. When they tell you to do stuff, you better check to see it. See, look at the current debt right now. If you do a trailing 12, it's probably much higher. Current debt, boom, $2.1 billion. They just increased another close to $1 billion or so. This is why they want you to buy into it, because they have been loading debt onto this company. Negative cash position to the tune of tens of billions of dollars. Why? Oh man. But anyway, so the only way that this company is going to survive is having to dilute shareholder equity. That's the only way, because without that, companies can't survive it. Well, thank goodness they actually have $5.5 billion shareholder equity. But I bet you anything, look at the goodwill. Look at the goodwill, you guys. And this is why you have to be careful when these people are pushing something to you, like Dollar General and all that stuff, instead of GameStop. Really? Really? Genius. Look at the intangible asset. This is asset that is arbitrary. They just made it up. You cannot sell this asset that they tell you. at this price. It's much lower. And if you have a lower, sorry. If you were to subtract goodwill from shareholder equity, you hardly have any shareholder equity at all. Even Warren Buffett says too on one of his video or his earnings call. You could Google it. Well, let's listen to it just in case, and I'll end it here. Goodwill, Warren Buffett. I think right here.
I'm Liam O'Connor. I come from County Kerry in Ireland, and I must admit the sun shines a little bit more over here than it does on the other side of the world. I was wondering today if you could shed some light on accounting for goodwill. You reference in your report on several aspects, including your principles, owner principles, and as well as the fact with the current merger of General Re. It seems to me there are several different methods that are used worldwide, right. Through amortization to direct write-off, and the fact when a merger like this is taken, it kind of skews the balance sheet. And I was wondering, in your view, what would you recommend as a more appropriate method for accounting for goodwill? And secondly, if I could direct it to Charlie, one of the ideas, why not tie goodwill to the share price and have an intangible and a tangible part of shareholders' equity, the intangible piece being the difference between the book value and the share value of a company?
Okay, I'll take the first part, and it's a good question about goodwill and the treatment of goodwill for accounting purposes. I actually wrote on that subject, I think it was in 1983 in the annual report, and if you click onto the BerkshireHathaway.com, you can look at the older letters, and you will see a discussion of what I think should be the way goodwill is handled, and then we've discussed it at various other times in the owner's manual. To give it to you briefly, in the UK, for example, goodwill is written off instantly, so it never appears in book value, and there's no subsequent charge for it. If I were setting the accounting rules, I would treat all acquisitions as purchases, which is what we've done virtually without exception at Berkshire. I would treat all acquisitions as purchases. I would set up the economic goodwill because we are paying for goodwill when we buy a General Re. I mean, we are paying billions and billions of dollars for it, or when we buy a Geico, or when we buy an executive jet. That is what we are buying as what I call economic goodwill. I believe it should stay on the balance sheet as reflective of the money you've laid out to buy it, but I don't think it should be amortized. I think in cases where it is permanently impaired and clear that it's lost its value, it should be charged off at that time. But generally speaking, in our own case, the economic goodwill that we now have far exceeds the amount that we put on the books originally, and therefore even by a greater amount exceeds the amount that remains on the books after amortization. I do not think an amortization charge is appropriate at Berkshire for the goodwill that we have attached to our businesses. Most of those businesses have increased their economic goodwill, in some cases by dramatic amounts, since we've purchased them. But I think the cost ought to be on the balance sheet. It shows what we paid for them. I think it should be recorded there. I don't think that the coming change in accounting is likely to be along the lines that I've suggested here, but I do think it's the most rational way to approach the problem. And I think that because there is this great difference between purchase and pooling accounting, that some really stupid things are done in the corporate world. And I have talked to managers who deplored the fact that they were using their stock in a deal and going through some various maneuvers to get pooling accounting because they thought it was economically a dumb thing to do, but they did it rather than record amortization charges that would result from purchase accounting. And they're very frank about that in private. They don't say as much about it in public. Charlie?
Yeah, generally speaking, I think that what Warren argues for would be the best system. Namely, set up the goodwill as an asset and don't amortize it in the ordinary case. However, there would be plenty of cases when the cases wouldn't be ordinary cases, when amortization would be rational, in fact should be required. So I don't think there is any one easy answer to this one, and there's a lot of crazy distortion in corporate practice because of all the changes. I mean, Australia has cowboy accounting, and Europe has this write it all off immediately accounting, which is, what would you call it, half cowboy accounting, and maybe mining promoter accounting. We think the system should be better than that.
Well, what he's saying is that goodwill shouldn't be accounted for when you evaluating companies, right? Unless you could subscribe to or prescribe the goodwill value to the point where you are sure that you're going to get that value back. So a goodwill value of $5.5 billion right here, he's saying that unless you could double that amount right here, you shouldn't be accounting that at all. And so that's why, to me, because it's intangible, it would be a cowboy accounting, right? Or it's just like fuzzy math or whatever, so to speak, like Lionel was saying. But this type of thing, if you were to account for that, you're not going to be able to do it, because again, like that's going to make it look like Dollar General is going to only have, hold on one second, minus this, sorry, from $5 billion to $4 million. Okay? 4 million. I'm not joking. This is ridiculous. Hold on one second. Am I doing this math right? I feel like I'm doing this math wrong, you guys. It's so ridiculous. Okay, let me redo this. So what I'm trying to do is subtract the shareholder equity, which is, let's do the decimal point here so it makes more sense. Hold on. Actually, let's write it, because I can't believe this is happening. Okay, so that's $5.5 billion. Okay, minus. Let's express it fully, huh? 553. That's $5.538 billion to $4 million. So I was originally right. So without those intangible assets, Dollar General only have $4 million of shareholder equity. So these geniuses want you to buy into that. Good luck. Good luck if you believe in this. But yeah. So this is the type of stock that they want to push to you rather than GameStop. And that's why they want to steer you away from GameStop, because GameStop is much more valuable. In the future, I'm not saying it's right now, but in the future, because we don't know what's going on, the unknown is just so exciting, and that's why it caused these people to come out of the woodwork saying that it's the worst idea of all time, when it is exactly what Warren Buffett has done, for the company, for his holding. And so, yeah, I mean, come on, this is. Again, that's why my title is, this is the best investment of your life. So, all right, guys, that's all I have. I'm sorry. Thank you so much for all of you for sitting through all this. And I appreciate all of you for being here. Lionel, Migo, and whoever just looking about. Yeah, thank you. Appreciate you.